Man, so could Bitcoin be forming the bearish breakdown, which could be the breakdown that takes us back down to those lows of 17,600. As you guys know, we are in a very tricky macroeconomic situation right now. Things aren't looking great. We've got worries about increased raising rates. We've got issues with the Euro GBP, Dixie showing strength, which I'm going to cover off. Loads to cover off. Tomorrow we got the non-farm payrolls. It's going to be a packed one, guys. Smash the likes. Don't forget to subscribe. As always, if you want to trade any of these moves, you can do so using BYBIT or BitGet. Link is in the description. They're offering some really good bonuses. So if you're looking to get yourself set up on a trading platform, those are the two that I personally use. Now, as you can see here, we've fallen sharply here from the long-term pattern. We consolidated. We fell again after Jerome Powell. Now, what are we doing here? We are forming a bearish flag or bearish pennant, whatever you want to call it. As you can see, we're getting our consolidation. I'm going to show you this breakdown and the exact price target I think it could be heading to. We also need to take a look at fear and greed index, because there's no coincidence that this has now tumbled back to 20. It feels like a long time ago, but it wasn't. Just over a week ago, you were at plus 40 on this, okay? Back in this kind of a range. Now back in extreme fear, markets are worried given the changing rate environment. If we head on here, you can see we've got the non-farm payrolls coming out tomorrow. I'm going to cover off what that means very, very shortly, but also this is what's weighing on the market, okay? Now the market is all but pricing in a 75 basis point rate hike, and this all started when Jerome Powell spoke last week, and the market still has not shaken this off. They're having to understand that, look, this is going to be a tough environment, and he's going to continue to raise rates, and there is nothing we can do about it. We can't be risk on in this environment, and we may be going back down to test some of those June lows on the equity markets. Remember, September is a badly performing month historically in the equity markets, and therefore Bitcoin be correlated to that as well. If we look at the pre-market, we've got some red, right? 0.56 down in the Dow, 0.66 on the S&P, and the Nasdaq is down almost 1% here. Another bad day to open up this new monthly candlestick. Now, what is this Bitcoin pattern I'm talking about? Well, let's switch on over to the 4-hourly. And what you'll see on this 4-hourly is we get various different consolidation patterns, right? This is just a consolidation pattern. It's a continuation pattern for your downward move. And again, if you aren't familiar with this, check out the link in my description. Free Skillshare course. It's completely free, guys. It's completely free. Go and watch that. It's my full technical analysis course. Everything is in there. Doji candles, different types of candles, different types of chart patterns, inverse head and shoulders, rising wedge, falling wedge, ascending wedge. All these different things are in there. So if you don't know what I'm talking about, you need to have that course handy. It's completely free, right? That would retail price at over $1,000 if this was another influencer. But I'm making that available for free for you guys so you can get that education. Now, as you can see here, look at this. This is our consolidation, right? And we've been trading this beautifully all week. You can see we had this trend line, we called the breakdown. We had this trend line, we called the breakout. Now we need to see what is going to happen. Are we going to break down from this pattern, or are we going to bounce to the top and then come back down and maybe break it as well? I mean, very unlikely that we're going to try build our way back up. In order to do that, we need to retreat quickly up to that 22 range in order to get any strength here on Bitcoin. And the bears are definitely in control. To show you why, let me bring out the 4-hourly EMA. And when you look at this pattern with that 4-hourly EMA ribbon superimposed on it, you start to see how difficult a situation we are in right now. We consolidated into our EMA ribbon, we got thrown to the downside. We consolidated into our EMA ribbon, thrown to the downside. Are we going to do the same? Are we just going to bounce to the top of the wedge, which takes us halfway through our EMA ribbon at around the 20,000 level before being violently thrown back to the downside? But here's the scary thing. If I then remove that EMA ribbon and I take a measured move, and again, this is me being conservative. I could take the longer measured move, but let's just take this measured move here and let's apply this at the point of breakout. Let's say we were to go back up and then come back down and break out at about here. Where does this price point take us? Well, this price point then takes us, and this you'll see this is no coincidence whatsoever. Look at that. Where did that move take you? Exactly to our support line, which sits at that 17,600 low. Why is that important? Well, I'll show you. If you zoom out here on the daily chart, you will see exactly why that is important. So as you can see, that brings you down to those lows where that yellow line is, which was that previous low which we created on the 18th of June when we touched that 17,000 low, 17,560 odd that it was exactly. So that is what I'm worried about here. Is this, does that pattern unfold? And the only way we're going to survive that is if we can get some move to the upside. But the worrying thing is macroeconomics are not stacking up with it, right? They're not stacking up with it. And this is a little bit of a concern as well. We had the ADP jobs figure come in yesterday with 132,000 jobs instead of 268, which was good, but wages climbed by 7.6%. So there's still an inflationary effect in wages, which again is going to weigh on the markets as well. Stay tuned, guys. We're going to also cover off what happened with Michael Saylor and the latest Mount Gox FUD as well. Let's call it FUD. I'm going to break down exactly what to expect because there's a new document which has surfaced, which we need to cover off as well. Now, some people are arguing, look, the RSI's topped out here on the daily. Therefore, can we not get a nice big move here on Bitcoin? You know, the RSI is one indicator, right? We can't get super excited by just the fact that RSI is oversold. In your downward trends where there is real underlying weakness, then you're going to expect downward trend. It doesn't matter what the RSI says. If I said to you now that Bitcoin got hacked and the RSI, you'll be like, oh, the RSI is low, therefore we're going to bounce. No, that doesn't matter. This is why it's so important and why I bang the drum about blending technicals with fundamentals. This has been a big thing on my mind ever since I started trading in traditional finance. I always met people who would just do technical analysis, and I just never understood it. How you need your technicals, you need your fundamentals, and you need your macro. Anyone who wants to bury their head in the sand and say technicals is fine on its own, you're causing yourself a bunch of problems. Because even if you're the best technical trader in the world, how are you going to trade going into a CPI reading, let's say, without knowing that there was a CPI reading, right? Your pattern will break down. So this is our worry here to the downside. We've got to keep an eye on this. Let's also take a look at part of the reason we're seeing this weakness in Bitcoin, and that is continued strength by the dollar index. This is always the precursor to when we see weakness in risk on assets in the NASDAQ and equities, but also in Bitcoin as well. So you're seeing this continued strength here. You know, a lot of people, including myself, were hoping maybe we can get this double top, but we were just wishing in vain, right? Continued strength here. Just had a little bit of cooling off, and now it's looking to bounce back with vengeance here. If you bring out the EMA ribbon on the daily chart here, it did not even come down to test its EMA ribbon. That's how strong it was. Even if it did this, that's still hugely bullish for the dollar index, but it's just showing really good strength here. So we need to respect the fact that the dollar is showing strength, and that is going to create difficult times for risk assets and Bitcoin. So anybody selling you dreams that we're just going to suddenly run up to all-time highs now, what evidence are they basing that on? Are they just guessing? Because anybody can guess and be right some percentage of the time. What data are they backing that up with? Is it a fair claim? Are they using the data? I mean, yesterday we covered off the on-chain metrics. Make sure you go watch that video. I'll link it up for you guys as well, which show worrying signs in the underlying data on the on-chain metrics as well. So for anybody to say, oh, we're going to run up to all-time highs, what are you basing it on? Is it the on-chain metrics because it's showing some weakness? Is it the technicals? We're seeing some weakness. Is it macroeconomy? We're seeing some weakness. And to pound the fact that this dollar is continuing to do well, we've just had a GBP weak day, right? If you look at the headline here, the pound, the British pound where I live here, GBP just had its worst month since Brexit, and analysts expect the slide to continue. We know the euro fell below parity with the dollar, right? So everybody is flocking away from these currencies into the dollar in times of difficulty. So if you're imagining people are flocking from the euro and the GBP to the dollar, imagine what they're doing from other currencies around the world. So this dollar index, I can't see a way this is going to cool down. And if this continues to show strength, it could mean more weakness in the Bitcoin price. So I'm looking out for that. Now let's take a look at what's going on with Michael Saylor. New fresh FUD here to start the month of September. And we're going to take a look at the monthly chart on Bitcoin as well. So make sure you stay tuned because we've got the month close on July, and I want to show you something interesting on the monthly chart as well. So District of Columbia is now suing MicroStrategy founder Michael Saylor for tax fraud. He went ahead and tweeted, "Today we're suing Michael Saylor, a billionaire tech executive who has lived in the district for more than a decade but has never paid any DC income." He also goes ahead to say, "I'm going to sue MicroStrategy as well." So MicroStrategy, the company, fell 4% as well. We did indeed have a response from Michael Saylor. Let's get a refresh on that just to make sure we can read through this. And he said, "A decade ago, I bought a historic house in Miami Beach and moved my home there from Virginia. Although MicroStrategy is based in Virginia, Florida is where I live, vote, and have reported for jury duty and is at the center of my personal and family life. I respectfully disagree with the position of the District of Columbia and look forward to a fair resolution in the courts." MicroStrategy, also named in the suit, denied its involvement, calling the issue a personal tax matter involving Mr. Saylor, and the District of Columbia's claims against the company are false, and we would defend aggressively against the overreach. And again, guys, what does this matter towards Bitcoin? To be honest, it really doesn't matter. A lot of people use MicroStrategy as some sort of proxy for investing in Bitcoin. Fine, to that extent, maybe it affects you if you did that. But other than that, we need to stop putting these individuals on a pedestal, right? We've seen this with smaller projects, whether it's Do Kwon at Luna, or whether even when we saw Andre Cronje leave at Phantom. We can't put individuals as figureheads of these projects. It can only backfire on the community. So things like this, where Michael Saylor has his own tax issue which he needs to resolve, it's his problem, right? It's a personal matter. Let him go deal with it. The fact that Attorney General decided to tweet it is lame, and they should go ahead and just resolve it in the courts. It shouldn't be anything for us to be reporting FUD on. So let's park that to the side. Now, more interesting and more related to us is this issue with Mt. Gox. And apparently, a repayment date, according to these articles, have been set. And a lot of influencers are talking about this. But I pulled up the actual document. And when you read through the actual document, there's no claim to it actually being paid on this date, unless I'm missing something. The assignment restriction reference period set with permission of the court is September the 15th. So it sounds like they can start assigning from this date, but there's nothing saying that all payments are going to be made on this date. So again, a whole bunch of FUD about, Mt. Gox dumping 137,000 Bitcoin on the market suddenly in 1 minute and crashing Bitcoin. It's just FUD. I've covered this off numerous times before, but you guys keep asking me about it, so I've got to cover it off again for you guys. This is not a big issue like everybody's making it out. If you guys don't know, this was an exchange many, many years ago, which was pretty much 70% of the crypto market in terms of transactions, and they got hacked. They managed to recover some of the funds, and they need to pay it back to users. Users need to apply to get their money back. The reality is, if you look at the situation, this is their holdings. They've got 137,000 Bitcoin sitting here. We can monitor it on the on-chain metrics, and we need to have a look at how this starts to decrease. But a lot of people are thinking it's just going to drop off a cliff down to zero. Very, very unlikely. First, people need to apply. They need to get their money. I think this can play out over many, many years, if not months. And if you want to look at this, not just from me, look at this. According to Django Bits, an alleged operator of a channel for Mt. Gox creditors, this process of repayment could drag on for months, if not years. As mentioned before, the trustee is not yet ready to pay out. There will be a KYC process. He has to explain how payments will happen. He has to collect bank accounts and so on. This will drag on for months, if not years. Nothing the trustee does is quick. And guys, let's be real. I've covered this off in past videos, but we'll do it again. Even if it was 137,000 Bitcoins thrown into the market right now, we could absorb that. It wouldn't be fun, but you can absorb that anyway. Okay, so let's park that there in terms of the latest FUD. Now, let's get onto Bitcoin, and let's get onto the monthly chart here, because I've got something interesting to show you guys. Let's put up the monthly. Let's do that. And let's move this CME ribbon for a second. So as you can see, we've now got our monthly close here on August. A red month. Previously, we were preceded by a green month, which stemmed some of that blood. But this rally here, I just want to remind you guys, this rally here was because equities had that same rally, right? That was when Jerome Powell came out too dovish and he gave the markets permission to run. Now he came back and put them back in their hole, right? He said, get back there, calm down. You are not getting to 25,000. Sit back down. So now we're probably expecting another few weak months. And this is the worrying thing, because this was 3 months of pain, 1 month of just stemming the bleeding, and then we're going to continue to the downside. So it's getting a little bit worrying here. If we bring out the Bollinger Band, you can see here, we are coming to the bottom of the Bollinger Band, but I wouldn't hold too much hope for that, right? Because on longer time frames, Bollinger Band probably isn't the best indicator. We pull that back out and look at the volume profile. You can start to see where things get a little bit worrying, right? You can start to see, let's just remove this. You can start to see that once we lose this level here at that 20,000 level, which is a key level, volume starts to become thinly traded. It's more likely we can fall quite sharply. So I'm not talking about those price points just yet. I think it's irrelevant. I think you guys have seen from my 4-hourly chart that 17,000 has officially come back into play. Right? It's not fun, but we're basing it off the data, and taking your bear flag from this position at this extension point brings you back down to that 17,600. This is not conjecture. This is using the technical arguments. You can see that the macro economy is not holding up too well. We've got our non-farm payrolls coming out tomorrow, which we need to pay a look for. And again, my plan is very, very clear. If we fall below this pattern and we start getting to the bottom of the channel, I will be buying the dip some more. And again, if you guys want to see all my key levels and all my key areas of where I'm buying, check out CoinPanel. Links in the description. Get yourself set up on there. There's a free trial you guys can use. But more importantly, you can see I set my exact limit orders and buy zones, and I tell you all the macro things I'm looking out for. And I update this regularly. So you can see here, when we were up here on this chart, I said I was looking for a breakdown of the trend. I set this on CoinPanel, and I said I will set limit orders for the portfolio buys in here. And I did exactly that. As we went into this purple box, I bought the dip, I nibbled for my long-term bag, and now I'm sitting back and waiting to see my next opportunity. So I will be adding some more of those as and when we continue to fall back down into this purple box. If we break down from that pattern I was sharing and get back into this purple box, I will be buying. If we lose 18,700, which is the green line here on the channel, then I will be going even heavier. Okay, very, very important. Now, one thing to remember, you do have some support from 19,200. Okay, 19,200 at this pivot point does provide some support. So even if we do break down to here, just want to hold fire here, because we could get some support from 19,200. Just want to make sure you guys are aware of that. That also ties in with the target from this breakdown, which is exactly 19,200 range. Okay, Hope you guys enjoyed this video. If you appreciate this quick type of content with all the key pertinent data you need to be navigating this wild crypto market, smash the like button. Don't forget to subscribe. Don't forget to go watch my on-chain video from yesterday. I uploaded a really important video going through some of the on-chain metrics on Bitcoin, and you're not going to want to miss what I found in those charts. I'm going to link that up here. Smash all the likes. Don't forget to subscribe, and I'll see you in the next one.